Hey everybody, welcome back to the channel. If we haven't met before, my name is Jimmy and this is my YouTube channel where we talk all things day trading, so welcome. So in today's video, I want to talk about my new trading plan, which is ironclad, super rigid. I'm literally making no decisions once I'm in the trade. Everything is mapped out for me, so I want to share those steps with you and talk to you about how I put that together. Then I want to dive into something else, which is position sizing. I kind of want to flip it on its head. At least in my head, it's flipped upside down. My head, your head, yeah. So anyway, if you stay tuned till the end of the video, I want to talk about, instead of focusing on share size when you're taking your positions, I just want to focus on dollar amount. And that way it'll play well with your metrics when it comes to risk to reward ratio. Now, if that doesn't make any sense, I'm going to explain it in the upcoming portion of the video, so stay tuned. Today, overall, I took 2 trades. I held them for a ridiculously long amount of time because that's what my system told me to do. So I was being good, and it resulted in 2 wins. Really excited about that. Both at a 2-to-1 risk to reward ratio. So not a bad Thursday. I appreciate everyone stopping by. Hit that subscribe button. If you like the content, give me the thumbs up and let's jump into it. All right, here we are. So I've got P and G up on the chart. This is the 15-minute chart. So my 2 trades today were on P and G and then on lift. And I want to show those both to you. They were both winning trades. And I want to show you what I saw and why I entered them. And then if you stay tuned towards the end of the video, I'm going to get into the steps that I'm following for position sizing and just the logic that I'm kind of maturing into. It kind of flipped it on its head for me, and I just want to share that with you. So just my experience here. So with P&G, the 15-minute chart, which is my larger time frame that I trade, I saw that we had pushed up and then had this bounce here. This pivot point right here was broken when it gapped down. So these lines are all representative of the close and the open. So I don't have my extended hours or after hours or pre-market turned on. I have it turned off right now. So here's today's action. But I saw a few days ago where this broke that line and then bounced here, and it's kind of just hovered and stayed below this line and where it all started from here. From here it dropped. So anywhere in this zone is sort of that neutral zone we talked about a while back, where I am short biased as long as we're below this line, and I am sort of indecisive when we're between this bubble and this line, and then I'm long biased if we go above. So this is sort of that neutral zone that we talked about. You can check out a couple videos ago, we discussed that. So today, I noticed it was just bouncing around, and then today I was looking for a pullback into this line, and then I was going to take it to the short side. So I set some alerts this morning, and that's something I'm doing, is getting up earlier and I'm going through stock charts, getting this set up so that I know all where my breach line is, I know where things start, I kind of have an idea for whether the market's moving up or down, long biased or short biased, and then I set up a bunch of alerts. So I had set an alert to let me know when price got really close to this breach line. So if I flip over and we look at the 3-minute chart here, you can see that we opened up today and we were above the breach line. So I wasn't interested as long as we were above, because I thought it could act as support and bounce and go. But once it broke below and stayed below, then as it came back up, I got more interested in it. So I'll turn on my trades right now and I can show you where I entered on this one. And so once it came back underneath that line and then pushed back up, I was looking for it to go below this daily SMA, this 9 daily SMA line that I have drawn out. So we dropped back below this breach line, and then I had a candle cross the SMA, and on the open of the very next candle, I went short. And my goal was to stop myself above. And I'll get into this a little bit later, but I'm actually using my ATR to help determine my stop loss, and then doubling that to make that my target for where I'd like to sell. So these are hard stops and targets that I put in. So the minute I was executed, I had put it out with a bracket order. And in Thinkorswim, a bracket order is just where you can execute an order and it automatically puts your stop loss and your take profit target at the same time. So they're already on the chart and they're ready to go. So I was stopped up here, and my take profit was at 104.45. So as you can see, this bounced around quite a bit and just sort of did some meandering. So my position on this being rigid was my stop's in place, my take profit's in place, and I'm not going to touch it. Because the more I mess with the variables, the less reliable it becomes. I have to have a system where I can have a certain number of rules that I never break, and I can't. And I know in the previous few videos I had a couple days where I was breaking some rules. In this case now, with how I have things laid out, I'm no longer breaking any rules. So I decide whether or not we are in buyer's territory or seller's territory, and I do that the night before and the morning of. And then once I have that set, that's the only logic I'm applying. Then after that, I am taking this position based on my rules. So I want to be pulling back into the breach line. I want to cross this SMA. I want the next candle to open after we get the cross, and I'm using the ATR to set my stop and my take profit. So those are kind of my rigid rules right now. And the other rule that I've added on is I'm not placing any new trades after 10 a.m. Mountain Standard Time, which would be noon on the East Coast, the lunch hour. So if I have a trade running, I'll let it run past 10 o'clock, but I'm not going to take any new ones beyond 10 o'clock. So with that in place, I just let it run. And I actually, once this was set, I had my stop and my take profit. I just closed the chart and moved on to other things, looked for other opportunities, because I literally don't have to worry about this because I'm not going to touch it. It either fails or it works, and then I'm going to record the statistics. So for P&G, if I flip over here, I took P&G short. I had a stop loss of 12 cents right here, and I had a take profit of 24 cents. 2 to 1, I took 100 shares. My profit was $19.50. So that's all it was. I'm just going to record things that way and just keep track of my wins and losses for my percentages. And I'm going to do this solid for 10 straight trades and see what my win rate is. And then I'm going to keep going, but I'm going to keep calculating it based on the most recent 10 trades. And then when I get to 20, I'll do a full 20 trade look back. But I'll keep going with the most recent 10 for a while and just try to really gather some hard statistics, because I've really not been doing that as well as I could be or should be. And the analogy I'd like to put on it, and this is kind of a weird thing I thought of today, was, you know, if you wanted to start baking and you started making cookies and you said, I'm going to make chocolate chip cookies, you put them in the oven, you take them out, you bite into one, and you think, oh, these are terrible. They're burnt and they're really salty. So you don't take the cookies and throw them all away and say, that's it, I'm done with cookies. I'm making cakes now. You say, oh, what did I do wrong to the cookies? Let me reduce the salt and let me lower the cooking time. Let's try it again. And then you get them back out and they've changed, and you see how they've changed, and if you've moved in the right direction, then you know that whatever little variable you tweaked, that was the right move. If they get worse, then you need to reset what you changed and look for another variable to change. You just have to make small tweaks. So many strategies, I think, work if you just make little changes. And what I've been doing is throwing the cookies away and moving on to something else. And then I don't do well at cakes. So then I move on to cinnamon rolls. I'm just like, keep moving on. I don't ever stick with one thing long enough to make it mine or to create rigid rules and just let probability play out and ultimately see how things go. So my thought here is I'm going to take these positions. I'm using small share size, and which I'm going to get to at the end of the video, focusing on dollar amount and not share size, and then just move forward and see what my statistics are, and then I'll share them with you. So that was a long side track there, but just wanted to share that and catch you up on what I've been up to. So P&G, you saw that. Now I'm going to flip over. The other trade I took was on Lyft. So let's go to Lyft, And the same thing on the 15-minute chart here. You can see Lyft, as we all know, IPO a couple weeks ago, and now it kind of trended up slightly after its big sell-off initially, but then it's been downtrending. So it's a nice looking downtrending pattern where we're getting these nice breaks, trickle down, break, trickle down, break, trickle down, break. So I was looking at this as, okay, we're in seller's territory right now. So I want to see a pullback into this breach line, and then I want to see it roll over and I want to take it short. So I set my alerts this morning. I got alerted. I came over, I took a peek, and what happened was we got this pullback up. We got within 1 ATR of this line, which I like to see. As you can tell, the ATR is 43 cents right here, which is pretty volatile at that point. But anyway, it came around here. I got this candle breaking the SMA line and holding it below. And then when this candle opened, I went ahead and took it short. And my ATR was 36 cents right here. I think 36. So I set my stop and my take profit, but I set my stop at 30 and my take profit at 60 for some reason. So it wasn't, something got tweaked and I kind of messed that up. It should have been 36. But anyway, I did that. And then I held it and I was watching these two trades, my Lyft trade and my PG, my Procter & Gamble trade. And this thing bounced around and it got down here and I had that impulse of, ooh, you know what? I should cut the position. But again, if I take partial profits, then a full loss wipes out multiple wins. So I let it bounce, came all the way up here, and I just didn't honestly look at the chart. I just moved on to something else and left it alone. And it pulled back, continued to trickle down, and then it hit in this area where it was threatening, but wouldn't go down. I was tempted to flatten the position, but again, rigid conditions. I'm not changing. I can't because I can't keep tweaking variables. And then I got this bust down, and ultimately I think the low we got to was 61 even. Didn't go any lower. And then it bounced all the way back up. So I got profit at 61.02. Another great trade. I recorded it. Lyft, short, 60 cent take profit, 30 cents stop, 2 to 1, 75 shares for a profit of $45.76. And total for the day, 65.26. So small day, small share size, but great strategy rigidity. I feel very good about what happened today. I'm recording everything, and I'm going to keep reporting on this every day until I get to 10 trades, and then I'm going to show you the statistics on it. And that way we can talk about it. So with that being said, so we don't make this video too long, let's go ahead and jump into my logic about taking share size. So today, if I averaged it out, I was risking about $16.50 on each trade with the opportunity of making 33. So my two wins of 33 each average ended up being about $66, as you can see right here, 65.26. So my plan moving forward is to go ahead and risk $30 on each trade, or even $20. $20 might be even a smaller, more manageable amount. So let's say my ATR is 13 cents and I want to risk $30. So here's what I'm doing now. Instead of the old me would just say, on large caps, I typically take 3 to 5 to 600 shares. So I'm going to take 500 shares here. That seems good. Now I'm going to be controlled, and the reason I want to be controlled is if I change the dollar amount that I'm risking and I win one and I lose one, if the larger dollar amount is the loser and the smaller dollar amount is the winner, then I'm at a loss overall. So I want to keep my dollar units the same. I want to standardize that as well. So I'm going to risk $20. Every trade is $20. So let's say $20 and 13 cents is the ATR. So I know I'm stopping myself 13 cents. So I'm just going to divide that by 13 cents. That tells me that I can take a 154 share position on this stock. Let's say I want to risk my $20 and it's a 42 cent stop for some random reason. It's huge. I divide it by, well, 40. Divide it by 40. I can take 50 shares. So I'm going to start standardizing my dollar amounts instead of just getting into saying, because I've got these set up over here where it's easy to just punch these buttons. I'm going to go 300. I'm going to go 500. I'm going to go 1,000. And I've always focused on share size and not on dollar amount. And I think the emphasis for me needs to be on dollar amount so that if I have 2 winners, I won 2 units. If I have 1 loser, I lost 1 unit. So now I'm up 1 unit total. If those units are different sizes, then it creates all kinds of wonkiness, and I don't want to do that right now. I want things to be standard, consistent, and rigid. So I'm really tightening down on this, and I'm going to go with this for right now. And I'm going to risk $20 for, until I get to 10 trades, and then if statistics are saying that I'm better than 50%, then maybe I'll up it and I'll say, okay, now I'm going to go $30, and I can divide it by, an 11-cent stop that I have randomly. And I can take 273 shares. So I'm going to start playing it like that, and that way I can just create a nice, level, steady, standard environment where if my chocolate chips are burnt or too salty, I can make 1 tweak and see what happens. Let it play out for 10 trades, see what the results are. If we're moving in the right direction, great. I could make another little tweak. But I'm not going to be mixing and matching and changing a bunch of things and completely throwing out my strategy. I think I have a good sound strategy that can work if I give it time and I give it boundaries. So that's my plan from here moving forward. Thank you. Sorry this video got a little long. I want to hear how you guys did today. I hope you were green. It was a great Thursday for me. I feel like I'm moving in the right direction. And if you have any comments, leave them below. Again, if you're new, subscribe. And if you liked this video, give me that thumbs up. I really appreciate all the support. And we'll be back at it tomorrow, so I'll see you then. Thank you for stopping by.